And in keeping with the theme, our stock of the day is CSL. C-suite changes there. Paul McKenzie has been appointed as the new Chief Executive and Managing Director. He'll succeed Paul Perreault, who is retiring after 10 years. In fact, he's been with the company 25 years. And McKenzie has been CSL's Chief Operating Officer and will move into the top job in March next year. So, Adam, how important is, such a large company?
Yeah.
Paul Perreault obviously had his stamp on that.
Yep.
You look at his performance, it's been outstanding.
Fantastic.
Hasn't it?
Yeah.
So how significant is this change?
So significant, yes, but the way they're doing it is absolutely right. When we have directors that just basically put an announcement out saying, I'm over this, they throw everything up in the air and they walk out the door, that's when you got to worry. This is an orderly unraveling of it's an orderly side of things, and I think that's really, really important. One, for the market to feel comfortable about the replacement, but two, that there's no infighting or there's no issues going forward. So I think he's done an amazing job. 10 years in the chair, he's grown billions of dollars worth of capital inside of that share price. The only thing that I would say about that share price here at the moment, because you're going to ask me if it's a buy, hold or sell, is that it has struggled to get through that $300 mark a couple of times. And we're here again. It did try and get through that $300 level. It's failed again.
It's a psychological barrier, isn't it?
It's a big one, and it's taking its time to sort of try and push it through. And it has been there 308, 310, that kind of thing. But that $300 level has been a big level. So for me, it's going to be a hold, because I think overall that the business is fantastic, management are fantastic, everything, but price action, I'll be putting my bids in around 285, because that's exactly where it's sort of 300, 305 and down at 285, 280, somewhere around there. You can pick this up because it is in a sideways pattern at the moment.
All right. So Scott, you're liking what you hear from the company in terms of that transition?
Yeah, I think Adam's nailed it. You want to make sure, look, particularly with these expensive big businesses, everyone wants to believe, and you want to see evidence that everything is kind of being done in an orderly way. You don't want to scare the horses, so that's exactly what you want to see. I can't add much more to what Adam's already said. I think the challenge with CSL, here's the thing about CSL, it's a bit the same as the banks, honestly. We'll talk about a couple of banks a bit later, but the way we think about some of these businesses is we take this historical lens, this 10, 20, 30, 40-year lens, and say, CSL has done X, therefore Y. And that's not necessarily the wrong approach to take, but we saw from that chart before, the shares have gone almost exactly nowhere, up and down a little bit, since 2019. In other words, if you bought shares in 2019, you maybe a tiny little bit of dividends, but it's gone nowhere. By the time we hit, maybe 2 weeks' time, it kind of, I think my number's 10th or so of January 2019, I think it was. Yeah. If we get there roughly at the same price, that's 4 years of nothing, no return. Now, given the last 4 years we've been through, that might not be the worst thing in the world, but it's also kind of worth thinking about the CSL that we think we're buying, the business that, has it done extraordinarily well over an extraordinary amount of time? Yes, absolutely, very, very clearly. This has been a great business, as Adam said, generated billions of dollars of wealth for shareholders. But has much happened since? And so you've kind of got these two questions of, have they done exactly the right thing with the executive changes? Yes, clearly done. Communicated it nicely. They've got a plan in place. It's going to happen in an orderly fashion. Those things are great. Is it worth buying these shares? I think that's the key question you want to ask. And so you've got to look at both the history and the market expectation. Those two are different things. So share price has gone nowhere in 4 years. At the same time, by the way, earnings are up the best part of probably 20%, give or take. And so there is some element of catching up in the share price as well. I've never owned CSL. I've been wary of CSL for the longest time, even over the last 5 years, I think it's up about 100%. It's a double in 5 years. That's a very good result for a very large business. I have avoided it simply because at 44 times earnings, give or take, even after going nowhere for 4 years, imagine what it was on 4 years ago, by the way. So it was probably 60 times earnings or 50 times earnings, and it looked too expensive then. It still looks expensive now to me. It is one of those companies that is made to look silly. They've done a sensational job of creating sales and profit growth over a long period of time. But if you ask me, how are they going to justify another doubling in the share price, which in theory needs to come with a doubling of earnings unless the PE expands again in a market-beating time frame? I don't know the answer to that. So look, I wouldn't be selling CSL, particularly if I owned it for a while, because there's probably some nice capital gains there. You ought to be very careful about incurring capital gains tax unnecessarily. And frankly, CSL has done a very good job over a very long period of time. But is it obvious to me how they justify a PE that must be just not far from triple market average. And the growth has been okay, but not great. And the share price has gone nowhere. Feels too rich for me. So, look, I would probably hold.
Yep.
I wouldn't buy. I'd be tempted to sell, but I'd probably hold on to the shares, I think.
Okay.